Hello, everybody. Thank you for joining us for this last hour of trade webinar. Haven't had one of these in a while. Good afternoon, Jim.
Good afternoon. All right. I want to start in saying that if you don't start with an overview of what's going on in the market, more than likely you're going to find yourself at an extreme disadvantage. I do everything. I start with the monthly, weekly, and then I come to the daily. I'm only going to start with the daily here today. But when you look at this, you'll see this is where the market broke to the high. This is where it came back to the low. This formed the low. The market went on up. Then you take this comes back. This is the first pullback. So this is number one. Then the market almost perfectly fit a trend line. When I see the market almost perfectly fit a trend line, that communicates to me that the traders are short-term traders. Institutional traders do not trade in this exacting of a manner. This tells me that the market's getting very late. This is your laggard buyers. Now this went on for some time, but look at, there it is. It broke. They did the same thing again. Laggard buyers, it broke. Now look at this as the second time down to this support level. One more time, one more time, one more time. Each one of these, markets don't die easily. They don't die easily. Everybody's, very enthusiastic. Then you break again, but this is giving very heavy. One time, don't forget, we'd been down here twice. Very often, it usually takes 3 times. It doesn't have to be, but it's very often, it's 3 times before you get through one of these levels. What happens, short-term traders, every time it comes down here, and maybe even some intermediate-term traders, they call that support and they buy it. It comes down and they buy it. You look here, they came down. Look what they did the very first time they bought it. Then it was over. Okay, so this was just a large trading range that went on for a considerable period of time. Now, when I would talk about this on some of the weekend, when we do the little short weekend ahead video, I can't believe how many people would just get really angry at me and tell me I didn't know what was going on. The market was clearly going higher, etc. The majority of people clearly going higher. Well, this is 1, 2. There we are for the third time, and that's usually what it takes to break through. Now, we said early on, this was the first time the market. This was 1. The market breaks. We've now come back down here a second time. We've come back down here a second time. And that's what the market's trying to lift off of this now. So right now, the trend is down. Short-term trend is down, maybe the intermediate-term trend. And this is our trading range for right now. Now, I don't know if it's going back up there or not, but this is the clear level that you're going to be focusing on as we get into the next few days. This is a kind of a go, no-go level in here. But if you don't do this process, you're doing yourself a tremendous injustice. To get us feeling of what the market's really doing, not what your bias tells you, not what you want it to do. Okay, but that's where I start. That's where I start. Now, we're going to watch. We got another 45 minutes till the market closes. But right here, what do we have here? Jen, I'm looking for an answer. What are these 2 days? What do these 2 days represent as they sit right now? And I'm looking for answers from people. Jen, are you there?
Oh, yep. A lot of people answering with balance. And then somebody specifically said 2-day balance, and somebody said it was an inside day. Another person, possible excess, short-term balance. Okay,
it's not an inside day. We did look above, briefly, there's a couple ticks this morning. It's a 2-day balance. So we're coming in and we've got PPI tomorrow morning. It's a 2-day balance. Now, I know there's a lot of you out there. I saw some of the registrants early on. There's a lot of you out there that have heard me constantly talk about balance. First, what is balance? And what is the message delivered by balance? And what are the balance trading guidelines? And again, I'm looking for answers. These are because there's a lot of you that have been in the courses before.
Okay, you're asking, okay, somebody's saying go with the break, fade of failure, balance is acceptance, go with breakout or breakdowns, go with breakouts, go with the breakout of balance, need more information, go with the breakout of balance or fade of failure.
That's the first thing. When you have a 2-day balance or an inside day, the message being delivered by the market is it wants more information before it makes its next directional move. That's the message that the market is giving to you. Then we have the balance trading guidelines. If the market remains within balance, that just further tightens the balance. Second, go with any breakout from the balance. And third, fade or go against any breakout that fails. So in other words, if the market attempts to break out to the upside and fails, okay, today looked above yesterday slightly, failed, then the destination trade, the potential destination trade is the opposite extreme. And that's what it did today. So we've got a 2-day balance coming in here. Now, I'm going to go and we're going to look at this on the market. Okay. Now I'm going to take out, well, before I do this, I'm going to take out the overnight. Okay. Here's the overnight settle. So what was, as you come into this morning, what was inventory as the market opened this morning? Was it long, short, or balanced? I'm looking for answers, please.
Long.
Okay. If overnight inventory is long, what are the approximate odds that we will get a counter auction or correction of that overnight inventory? And again, I'm looking for answers.
70%, 70%, 70%, 60%, 75 to 85%, about 65%. Very high.
So about the 70, 75%, and it's not a science. Okay, it's not a science. But if you don't get immediate follow through, then you've got a lot of long overnight inventory, and the odds are very good that you're going to get a counter auction or a correction to that inventory. That's extremely important because what happens so many times, you get mesmerized by price. When you get mesmerized by price, you forget all of that. You do all this preparation, and then you get following the little price bubble when the market opens, and you forget what the message really is, what the broader message is in the market. So now, the other thing, did the market open within or outside of yesterday's range?
Inside.
Okay, I'm going to take out the overnight. Just to give us a clearer picture. We've talked about the overnight, but I'm going to take it out. Okay, so the market opened within yesterday's range. Now, unless the market single prints out of yesterday's range fairly quickly, what kind, and so you're trading within yesterday's range, unless the market single prints out of there pretty quickly and builds higher or lower value, what kind of trade are you likely to see today? How would you classify the market? And I'm looking for one word. I'm looking for one specific word.
Okay, I'll read you off what we've got here. Rotational, chop,
Okay,
rotational,
let's stop right
rotational,
there.
chop.
Let's say chop. Okay. When the market opens and remains within the previous day's range, the odds are that you're going to have a very choppy market environment. Chop is one of the most expensive markets that you're going to get yourself caught up in. I mean, expensive to you, expensive both from a money standpoint and expensive from a psychological standpoint. These are the kind of days that you get yourself whipsawed in, and they can be very, very expensive. Okay, now we're coming up. We've got 45 minutes till the close. We're still within yesterday's range. The market is very quiet. Now, with the background we've just talked about, remember, within yesterday's range, high odds of chop, within yesterday's range, is the market likely to be controlled by the longer time frame or the day time frame? I'm looking for an answer. When you're in the previous day's range and you remain in that previous day's range, who is more than likely going to be your competition?
Okay, and that's a resounding daytime frame.
Daytime frame traders. Daytime frame traders are generally the weakest hands traders. Okay, now what I'm going to do is something very specific I want to show you in here. I'm going to ask Jen to replay. Well, first of all, before we replay this, I'm going to do a commercial. It's amazing. Sometimes people get all upset at this commercial and things like that. But the first thing I'm going to talk about, we've got the new book out. The new book was published, I think it was officially the 11th of February. The name of the book is Markets and Momentum, How Profiling Gives Traders an Advantage. Basically, what it's really saying in there that what it does, it puts context around, no, I don't want to go there yet. We'll go there in a minute, but take me back to my screen, please. We'll get there in a minute. Okay, just a second. Okay, now, what I'm going to say here, and if you think I'm doing the commercial for the book, I am, but understand I get about $1.44 per book, so you can understand it's really, it doesn't mean much. It's more important to you. What I did in the last 3 days, I have reread the book from start to finish. And sometimes, it's just kind of a refresher. My suggestion is read this book, and some people are going to be frustrated because it doesn't tell you where to buy or sell. I don't do that. But it is packed with nuances. It is packed with nuances that you need to be a competitive trader. If you really absorb that book, look for the nuances. Forget the bigger picture. You want to have the bigger picture, but you also want to get the nuances. Anything that you are going to be competitive in and be a professional, the real dividing line between the pros and the non-pros are going to be the nuances. That's where the difference comes in. So first you do that. And remember, a lot of people get very frustrated because they want simple answers. Where do I buy? Where do I sell? It doesn't work that way. And my guess is if that's your attitude, you're probably getting chopped up in the market. But if you're relatively new or you're unsuccessful so far at this trading or not satisfied, absorb this book to the fullest. And I'm serious. Several reads, watch for the nuances. Then we've got a primer. If you haven't been through one of our courses before, read the book first, and then we've got a primer coming up here. And the primer is 8 days. I'm going to let Jen talk about that, but that will help you get a better idea of what short-term trading is really all about. Jen, talk about the primer briefly.
Okay, I'll just take back the screen just so that newer folks know where to find it on our website so they can see the information.
Okay.
Okay, you can go to jimdaltontrading.com. You'll see in our sliding images, it's featured up here at the top, or you can go to courses at the top navigation. Specifically, this primer runs from April 23rd to May 1st. It's an 8-day course. The current sale price is $499. I just want to mention the most asked questions that I get from new folks when they're asking about the primer. You do not need to have market profile charting software. Usually that's something that unless of course you want to observe the markets outside of when we have class, but usually I understand people need to make their choice and decision over time to figure out which software fits their budget and their needs. So you do not need to have market profile charting software to join us for this class. You do not need to have any prerequisite requirements to join us for this class. And all of the live classes are recorded, and you have access to it materials for 3 months after it finishes so that you have time to review. Now, the next question is, oh, I have work or I have a vacation coming up or something like that, or I live in a time zone for which I can't join all of the classes live. That's okay. That's why we record it, so that you can go back and rewatch it. And even if you're there for every single class live, believe you me, there's enough in it that you're going to want to go back and rewatch the material in order to absorb it, unless, of course, you are a person with a photographic memory. If you have any questions about the course, you can go to our website and go specifically to the primer and get all the details here. We also have the schedule posted. So these are posted in Eastern time, so adjust for your time zone. But you can see we even, since it's an 8-day class, we even have it on a Saturday morning as well during this period of time. But like I said, if for some reason you can't join us for all of the classes, or maybe none of them because of your job or time zone, it's not a problem. Take the opportunity to join us for this class. It's not a class that we do often, and it's great for beginners, anybody who's trying to learn more about market profile. Maybe you're completely new to it, or for those of you that know a little bit, just enough to be dangerous or whatnot, want to make sure you understand the concepts as Jim teaches them, because I can't tell you how many people have learned a thing or two here and there, come and take a class, and then find out that a concept that they learned elsewhere that either they weren't taught the right thing or they misunderstood how Jim was, Jim's interpretation. So,
Jen, thank you. Let me make one comment before you take us back, and then
sure.
we're gonna replay part of today. Again, before we go back to there, if you really are serious, read the book several times before you take the primer. You will be amazed at how much you can get out of all of that in a relatively short period of time. Okay, let's go back, see where the market is right now. Then we're going to replay early this morning.
I'll give you the screen back. Or you want me to give you the screen back, or do you want to go to the replay?
No, give me the screen, please, first.
Okay, there you go.
Okay, so nothing really changed. We're coming in, we've got about 40 minutes till the market closes. We are still within the yesterday's range. Chop continues, right? Okay, so everything's been pretty much as advertised today. You get the chop. You had a chance this morning. You looked above the previous day's range, and you didn't get any any upside follow through. That is usually not a good sign. But before we replay today, an hour before the market opened, what happened this morning? You got information on CPI. CPI immediately got a knee jump rally in the market. There was no follow through. It was a positive number. It was reported as positive. You got no follow through on the number. That should be the first thing that tells you, wait a minute, if the market was looking for an excuse to rally, That was its excuse. The number was positive. It popped immediately on the number. There was no follow through. That is an observation you should make immediately. Forget about the number. Forget, there was the market generated information. You got short-term people go, oh my golly, and they bought it. No follow through. That is informational. If there was real buying there, that market would have gone. It had good news. Okay. Now, so then as we come in, got a pretty good idea, as I've said before, a rotational day, opening within the previous day's range, the odds are you're going to get chop, and chop is one of the most expensive things we deal with as traders. Now, as we replay this, what I want you to focus on what you did, what you saw this morning, and remember how misleading price can be. We're going to do the replay, and I want to try and make real to you what short-term traders were doing. Jen, let's do the replay starting with C period, please.
Okay, let me take back the screen. Okay, can you see my screen?
I can.
Okay, well, what speed do you want to start this off at from C period?
5 times normal speed for C period.
Okay.
So it's going to take a little while, but we've got time. Okay. So first of all, notice B period high is exactly half back from A period. That is not an indication. That's an indication of short-term selling, not long-term selling. Okay, look at the C period high. Half back from B period. So stop here 1 second. More than likely, when you see B period and C period coming from half back from the previous period, the odds are very high that that is day time frame, weaker hands selling. Now, that doesn't mean that there's not an opportunity there. But what it does mean that these are weaker hands, their staying power is weak, so the odds of continuation to the downside are greatly reduced. Okay, continue to play, please. Remember, 5 times normal speed. Also remember, overnight inventory was long. You see the settle down there at 55.77. Overnight inventory was long. We said there's a strong odds that you're going to get a liquidation break if you don't get immediate follow through from overnight inventory. So now the next lower reference, of course, is going to be the settle, and then it'll be the overnight low. Okay, go to about 10 times. We're just speed it up a little bit. So traders get fixated on these references, and particularly the shorter the time frame, traders, the more likely they are to focus on exacting references. Half back from A period, half back from C period. That's not what professional traders do. That's what short-term traders. If you understand that's what's happened, you can use that number. Okay, notice at the settle. So you got some immediate buying at the settle, people just using mechanical references. When you see mechanical references, that's usually a sign of weaker hands, buyers, and sellers. Short-term traders love to buy lows. They love to buy exacting references. So remember, the next one will be the overnight low if it gets through there. So it took out, they settled by 1 tick. They bought it again, right? why don't you just feel what your competition is doing. Okay, now it's getting pretty stretched out. So one more time, the overnight low was another reference they used. See how mechanical that is? That was really good, strong, other time frame selling. You're going to go right through that. All the indication here, the B period high, C period high, mechanically how it's acting at the settle and the overnight low, it's a really good indication to me that what I'm dealing with here today is the weakest of traders, the very short-term traders. They are the ones that are, when you see this, they're more than likely going to get themselves into trouble. They're going to get themselves too short. Markets have a tendency to get too long and too short. So much of day time frame trading has to do with inventory constantly getting too long or too short. Okay, now when I see this, I don't want to stay around. I'm very cautious now. Remember, there's piling on now. You know, the short-term time frame, it's going on. Everybody's piling on. Boy, everybody figured out where it's going right now, right? We're one time framing lower. Okay, the overnight low is going to be resistance on the way back up. The settle is going to be resistance on the way back up. The 56 or the 5600 level, the C period high exacting. Okay. Ask yourself this morning, were you getting caught by price? If you're selling in here, you are getting what we call short in the hole. Short in the hole means you're getting short at poor prices. You've been trapped by price going down. You haven't seen the nuances I'm talking about, the B period high, the C period high, what the market did at the settle. The rally in D period was exactly to the overnight low. Those are mechanical references. So more than likely, the inventory is getting too short in here.
Some related questions to where we're at.
Please.
Jim, do you want me to stop it to pause it?
Yes, please.
Okay. Do you look at the amount of contracts on the left that are bought or sold, and another person has something similar, meaning like taper in volume? Are you looking at that? Do you notice that volume?
What I'm looking at, if you look at the volume, which is on the left-hand side, pink, red is the heaviest, pink is next, white is light. So I do look at the volume. I have no idea what's bought or sold, and I don't think anybody else does, but I'm looking at the overall volume is light because it's white on the way down. That is another indication that the market's getting trapped on the short side. Okay.
For those of you that don't understand, this column of volume here is for the current period, and then the one to the left of that, this is cumulative of all the periods so far. Okay. Just so you know.
And that's how I use volume. This is set up on Window Trader. Okay, let's go to about 20 times. What I want you to feel is, I'm sure there are people out there getting trapped by price going lower. But I want you to understand the bigger picture of how much trouble was being developed in here, how inventory was getting short in the hole. Okay, we've stopped one time framing. A, B, C, D, one time frame lower, meaning that the low from the previous period was taken out, but not the high. Now we've stopped one time framing. to the downside. And remember what is important. I was reading this and taking you through step by step that inventory was getting very short, and the danger of being short was very broad. And most people, they forget about those things. They get so enamored with price that they forget about context. Okay, so we're back up. You see it exactly at the 5,600 level. But remember, this break started from C period. It started from a B period, but the real break started at C period. That's where you start to get the downside in the single prints. Okay, go to about 30 times. So they were selling it right at the C period. There's CEF, back below 5,600. Okay, stop for a second. Now, when I was watching this morning, I'm sitting there saying, the mechanical stop at C, E, and F greatly increases the odds that we're coming back through that. But now watch what happens. There's traders that are selling every rally up there, getting themselves into even more trouble. Continue to play. Let's reduce it to about 10 times normal speed, please. Okay. So you see when you traded there, now the third time it comes through. Now the next thing is going to be the B period. Remember that exacting reference up there. Okay. Take it up to about 30 times. Okay, let's stop here. What I wanted you to see the C and E period, and then remember F period. So before F period broke to the upside, you had CEF. The odds were super that you're going to take that out. So the market, remember, and these things, it's easy to talk about now, but unless you've really been through this, it's hard to keep a perspective. Now, I've done this enough. It was absolutely a super morning because I did read it right in there. But if you didn't, if you're enamored with price, and so many people get trapped by price, they forget the bigger picture. Remember, when you started out today, you should have started off with a minimum with the daily bar, so you had a picture of what's going on overall. Short-term trend is down. We got a downside breakout. We had news this morning, popped the market right after the news, which is an hour before the market. No good news, no follow through, no follow through. Record that. Okay. Overnight inventory was long. Very high odds that you're going to get a counter auction relative to overnight inventory. If you don't get that counter auction, if you're not going to get the counter auction, and overnight inventory is long, generally speaking, the market will rally immediately in the direction of overnight inventory when the market opens. So if overnight inventory was long and the market's going to continue higher, generally speaking, within a couple of minutes, you will continue auctioning higher. When you don't auction higher, that starts to put the mental pressure on the longs from overnight, and they start getting worried, and then you start getting the liquidation. Now, remember, the price is going down, and so many people are addicted to price. And How did you get all the way down? Because there were late people selling in the hole or selling at poor prices, called short in the hole. When the market came back up, we were C period, which remember, C period was exactly half back from B period. Then E period was exactly at C period. And then for a while, F period was exactly at E period. That's very mechanical selling. The chances that you're taking that out are absolutely huge. But they sold the market off a little bit. But again, let me stop here and ask any questions that you have. I mean, this is the stuff that short-term trading is made out of. These are the things you have to know. Too many people they're so looking at prices and they're so looking at setups or their momentum indices that they don't know how to look at a market right in front of them. Questions, Jen?
Yes, there's several different questions that we've had. Okay, with regards to today, somebody was asking, I'm surprised by the lack of tempo this morning after the CPI print and the relative lack of short covering. Would this be an indication that the selling over the last few days is larger institutions unwinding positions?
Not necessarily. You're making too much out of it. What it was telling you today, when you got that buying and no follow through, it just told you that there wasn't any buyers right now. There weren't any buyers right now. Institutions weren't doing any major selling today, or you wouldn't have a 2-day balance. You're making more out of it than there should be. As a daytime frame trader, the fact that the market popped after the PPI or CPI, no follow through, and long overnight inventory, the odds are you're going to get liquidation. And that's exactly what you got, okay?
Okay, if you have a weak or poor high, is it better to not take that short near that top and just let that trade go, even though it may run without you? Or is it still okay if it aligns with overall context and you know you're trading with the day time frame traders? And what is better for long-term success?
For long-term success, what is better is to be in tune with the market. Be in tune with the market. Do your homework. Do your homework. Do what I just showed you. And understand your emotions. Understand your biases. And like I say, when I do these weekend pieces, I'm just amazed how many times, I mean, people will write things, they're incensed with me. I don't think that's right. I think it's going to do this. I think the market's, I'm looking at this market and the market's just going to pull back and it's trapping all the shorts. I mean, people are adamant this is what's going to happen. That means when I read that, they're generally wrong when they're adamant like that. But what it tells me is they don't have a real relaxed perspective of what is really going on. And remember, my orientation is daytime frame. I start with a bigger picture, but I'm daytime frame. This morning, the big thing this morning was, one, you got the news, the market popped, no follow through. And it was decent news. No follow through. Overnight inventory was long. Overnight inventory is long. You didn't get any follow through, increases the odds of going back. Next, we're within yesterday's range. Pretty good chance that we're going to have a rotational or choppy day. And I constantly say chop is a killer. So again, there's where people get really worked up as trading, they want short-term trade. They want it to be more exacting. They want it to be more exacting and understandable. It's not. You're only going to learn to trade through experience over an extended period of time and constantly doing your homework and preparation. Too many people want it to be too easy and they want it to be by the numbers. Okay. What else?
Okay, does the profile work equally good on the NQ as well? What is the preference to use it for the ES or for NQ?
It doesn't make any difference. I use it for real estate. I use it for markets. Remember, the profile doesn't work or not work. The profile is simply a way to organize the market's continuous two-way auction process. The better something is organized, the easier it is to have an understanding of what is going on underneath the surface. Now, the NASDAQ is thinner, so the profiles are going to be more strung out. But again, it's the same concept. The profile is not, it doesn't work, or it does work. That is not a legitimate issue. The question is a distribution curve a fair way to organize data? Once the data is organized, it's easier to interpret or tease information from that organized data. Okay, next question.
I don't have market profile charts. Can I trade it on a minute candle chart?
If you want to lose money, you go to a minute candle chart. That is absolutely suicide. I'm going to guess that you're not profitable. If you are, if you can trade on a minute candle chart and you make money, good luck to you. You're going to get so much information so fast, it'll spin your head. The shortest chart I use is 30 minutes in here. Most people, they've been taught stuff, 1 minute chart, 5 minute charts, you know, looking at bid ask. I mean, that'll drive you crazy. It'll just really ramp up your system. If what you're doing is profitable, be my guest. I seriously doubt you are.
Okay. Do you consider the current contract that's about to expire in your analysis?
Yeah, it doesn't make much difference to me if I'm using March or June in there. I'm not being exact. I'm looking at it like the contract just to have a good feel for what the market's doing. Okay.
Okay. If these are all short-term levels, then it still doesn't point to a direction, just that those mechanical levels will get run back over. Is that correct?
No, what we started, remember, we started with the bar chart. Okay, the overall trend is down. Okay, the overall trend is down. Within that trend, markets get too long and too short. So much of short-term trading has to do what happened early this morning. Inventory got too, well, first of all, inventory was too long based on overnight. Then the market sold off and inventory got too short. Then the market rallied, inventory got too long. Now the market's back someplace around, around the center. So short-term trading is so much about short-term inventory getting too long and too short. Too many people are looking for grandiose things about all the long-term. The long-term has been in this market. I mean, we're down, the market's down 8 to 10%. Now, one of the dangers in here, with the market down 8 to 10%, generally speaking, the really long-term investment managers, the people that buy and hold things for years, if they were in and out of the market like you and I are, they would never be long-term investors. Usually the danger where we are right now is the longer-term investment managers, and they've been long for years. I mean, this market's been up for years. Markets are usually off about 8 to 10% before they really start to get nervous. And we are at that level right now. I have a good friend that you probably would know his name because he's well known, but I texted this to him the other day. I said, we're at that level, where this is where it's likely to see the real pressure by the longer term investment managers and hedge funds. He came back immediately. He said, you are right on. He said, he just figured out the hedge fund. He said, the hedge funds are extremely nervous and they're in extremely poor positions. So this is a major area where we are right now. Okay, next question.
Okay. Why does Jip no longer use the 80% rule? It seems to be still relevant like today.
I haven't found it to be relevant. I mean, I wrote about it early on and it wasn't relevant. I found it to be more misleading than anything else. But again, if something works for you, it wasn't ridiculous, but it wasn't reliable enough. And what I found out early on, you get too looking for the easy answer. And once you're looking for the easy single answer, that usually starts to cloud your mind, and you lose the total objectivity that you need. Okay.
Okay. I've been using the TPO for a few years and recently came across your channel and information. My intuition is good as I perceive the structure well. Recently, I've had problems with execution, as in the intuitive trade pops in my head and I take it, but I'm either a few points off and don't get filled or too shallow and get stopped out before the move happens. I know that you said exactness kills, but I'm 22. Would love your insights on my situation.
There's not much I can say. I don't know enough. I don't know enough about that. I mean, it sounds to me like you're a little bit too anxious in there. One of the helpful things is to look at where value is developing. Now, when you look at today's value, it's basically overlapping to slightly higher to yesterday. So when I look at that, chances are it's going to be more rotational. So let's talk about what I did today. And I won't tell you why. I've got a more complicated.
Jim, do you want me to give you the screen so you can have the charts? Or do you want to stay on mine?
Sure, that'll be fine, please.
Okay, let me give you the screen. There you go. Okay.
Okay, so when the market broke this morning, because I saw the B and the C period, and I knew that it was shorthand, weak hand selling down here. When I got down here, once it took out the sell, I just got out. I don't look for an exacting. I don't know. People ask me, where did you get in and where did you get out? I don't know. I go market. And incidentally, while we're talking about this, I'm showing you the ES now. I look at the ES in order to read the market. I trade the SPY. And I trade the SPY now because of the lack of slippage. And I go almost all market orders on the SPY. When I'm doing the ES, I don't do market orders. I usually, because the spread is too much, the slippage is too much, that I will use limit orders, which slows me down. With the SPY, the volume is so good and the markets are so tight, I can use market orders, and it's very, very beneficial to me. Okay. Final question before we go back and do a recap.
Okay, somebody was asking, would it be fair to say that sellers aren't getting paid?
What, I mean, I don't know why that's somebody's taught you that. And just look at what the market's doing. What is the market doing today? The market's in short-term balance, right? Trying to think about some esoteric things. It says the market getting, you ask yourself, the market getting too long or too short? Okay? We got a 2-day balance, right? We got a 2-day balance in here. That's what's relevant. But to go to this other extreme, and I don't mean to be sharp, but I'm saying those are the kind of things that will really mess you up as a short-term trader in here. What is the market doing right now in front of you? And remember, I'm approaching this from the point of view as a short-term seller. That doesn't mean that I don't look at the market overall. Remember, I said when I get done at the end of each day, because I've been a short-term trader, the first thing I do, and I'm going to go to my charts right now. So when the market closes, the first thing I do is I go to first thing I do when the market closes, I go to the monthly bar. Because I'm doing so much short-term trading, I want to make sure I jar my head to see what's going on in a longer time frame. We have a downside. Look at the monthly bar. We have a downside breakout. Okay. Now I add to that. I don't think so far there's been, even though the market's off 8 to 10%, I think there's a lot of pain out there and a lot of worry by the longer-term investment managers, as well as some of the hedge funds. So there's a possibility of a lot more to come. Doesn't mean there's going to be, but the possibility exists. But that's it. So I start with that. I look at the monthly bar. Then when I'm done with the monthly, I immediately go to the weekly. Okay, I look at the weekly, I get the same picture. Okay, that's all. And then when I'm done with the weekly, I go to the, where is it? Where's the, I go to the daily. I do this in order to get a perspective of what's really going on in the market. Okay, I mean, that's how I prepare myself. Now I may from time to time, do I believe, which I've been saying for some months, do I think there's a potential for stagflation? Yes, I do. And what I'm saying that what is stagflation? It's, you get kind of stubborn inflation, and then you get slower growth. But am I locked into that? No, it's just a broader picture in my mind. But what you see here is what I do to prepare for each day. Then I go to the profiles. Okay, so we got more news tomorrow.
Jim, you're on weekly, by the way. That was the weekly.
Oh,
See,
okay.
if
So
that
now I'm
mattered to you.
back to profile. So coming into tomorrow, what have I got for tomorrow? I've got 2-day balance is where we started, right? 2-day balance in the market. So balance trading guidelines as the market opens tomorrow. Okay, final couple questions.
With regards to the bar chart for the daily, do you consider that one time framing down on a daily bar chart to have stopped today?
Yes, it's coming in a short-term balance.
Okay.
Now,
Okay.
let me just review before I say thank you and leave. If you're really serious about changing your trading or really serious about a new way to look at the market, if you think that's necessary, my advice would be read Markets and Momentum, how profiling gives traders an advantage. I mean absorb it. I don't mean glance at it. Absorb it. Look for nuances. Look for the nuances that are in that book. Nuances are what makes the difference between the professional and the non-professional. Absorb that book. There'll be a lot of things you won't understand. There'll be a lot of things that are counter to things you've been taught. But if you put that aside, then you take the primer. And when we do the primer, the first 4 days of the primer are pretty mechanical. They're linear, they're pretty mechanical in order to give you a base of the profile and that. The last 4 days we try and really integrate what we've talked about with the market, real time, what's going on in the market with all the nuances. There's a lot to absorb in that primer coming at you very fast. If you want to do yourself a real favor, absorb the book first. I mean, really absorb it. And then the primer, and it will give you one heck of a base. Let me say thank you very much. And remember, tomorrow we had a 2-day balance. Balance trading guidelines are applicable for tomorrow. Thank you very much. Have a great trading session.
Thank you, everybody. And if you have any questions on our programs, feel free to call us at the number at the bottom of our website, jimdeltontrading.com, or you can also shoot us an email at dalton@jimdeltontrading.com. Thank you so much. Have a great week.